Welcome back, everybody, for another deep dive. This time, we're going into the world of trading.
Ooh, exciting.
But hold on, before anyone clicks away thinking this is all, day trading risky business,
Right.
let me tell you, it's not. It's not about that. We're going way deeper, like how does the market really work? Stuff that can help, honestly, anyone from experienced investors to even folks just getting started.
Yeah, for sure.
And to do that, we are going to be diving deep into Wyckoff 2.0, Structures, Volume Profile, and Order Flow. It's a book that combines, those classic trading ideas with modern tools.
Yeah.
Imagine upgrading your market GPS from that clunky old Garmin to the Tesla.
Oh, yeah, like trading with insider information.
Yeah.
But it's all there, right? It's in the
Yes.
charts. You just got to know how to read them.
That's a great way to put it. And that's where Wyckoff comes in. He was this legendary trader way back in the day, and he figured out how to read the market cycles, when's the smart money buying, when are they cashing out? And this book takes his ideas and kind of turbocharges them, for today's market where algorithms are doing, well, a lot of the work.
Yeah, I mean, the author actually argues that if Wyckoff was still around, he'd be all over these modern tools.
Like what?
Like, volume profile and order flow.
Okay.
It's about understanding the market psychology, not just, like the technical stuff.
Okay, I like it. But before we get too far ahead, let's break down Wyckoff, the Wyckoff method, the basics.
Okay.
Because I'll admit, I'm a little fuzzy on some of the details.
Yeah, well, the core idea is actually pretty simple. Markets swing between two main phases, right? Accumulation, where the big players, buy low,
Right.
and then distribution,
Right.
where they sell high. And Wyckoff basically created a way to see those shifts happening.
Oh, so it's we're riding the wave the pros are making, not getting crushed by it.
Exactly. But the book doesn't, pretend that charts are like crystal balls.
Right.
Because markets are messy. There's news, global events, chaos.
Yeah.
But Wyckoff 2.0 helps you cut through all that noise.
Right.
By combining those classic principles with the modern techniques.
I'm intrigued. But before we get into all the fancy tools, can you walk me through, a real world example? How can these basic Wyckoff principles show us something most people wouldn't even see?
Sure. Imagine a stock that's been doing nothing for months, just bouncing around.
Okay, yeah.
Most people see that and they're
Yeah.
boring, nothing happening here.
Right.
But someone using Wyckoff, they'd start looking for signs, right?
Yeah.
Within that range, are there higher lows? Is volume increasing on those little rallies? Those could be the early clues that the smart money is starting to accumulate,
Oh, okay.
even though the price isn't screaming, buy.
So it's like a detective novel. We're looking for clues, those subtle hints
Yeah.
that something big is about to happen.
Precisely. Wyckoff helps you anticipate, not just react.
I like that. Now, you mentioned that markets are messy. Even if we do spot these patterns, how do we know it's not just random? What if we're seeing things that aren't really there?
That's where understanding the market as an auction comes in.
Okay.
Wyckoff 2.0 ties this auction market theory into the classic principles.
Okay, auction market theory, that's new to me.
Yeah.
What's the elevator pitch?
Okay, so think of the stock market like a giant auction that never stops.
Okay.
Instead of bidding on a painting or something, it's stocks.
Right.
And that price is constantly moving up and down, to try to find the true value.
So it's the market is saying, hey, anyone want to buy at this price? And if no one does,
Right.
then it's okay, how about a little lower?
That's a great way to visualize it.
Yeah.
And this bidding, it's driven by three things: price, time, and volume.
Okay, break those down for me because they seem all kind of connected.
Yeah, absolutely. So price, that's the messenger. It tells you how much traders are willing to pay or sell at that moment.
Right.
Time, that shows us how long the market kind of hangs out at a certain price.
Okay.
So if a price stays steady for a while, it suggests people agree on its value.
Right.
And then there's volume, which is the muscle behind those moves. High volume means strong conviction, while low volume, it's hesitation.
So is this theory saying ignore the news, just watch price all day?
No.
Okay.
News, earnings reports, that stuff matters.
Right.
But auction market theory helps you filter it through a clearer lens.
Okay.
It's a reminder that the price already reflects everything, all the wisdom or fear of the whole market.
Right,
Right.
right. I'm starting to see how this adds another layer.
Okay.
But let's be real. Most of us aren't moving millions of dollars like, those institutions. So does this really matter to the average investor?
Absolutely. In fact, it's even more important for us, the smaller players,
Oh, okay.
because auction market theory explains why, chasing those hot stocks or panic selling rarely works. It's about understanding the psychology behind it, not just reacting to headlines.
Yeah. This is feeling like we're getting some secret knowledge here behind the curtain.
Yeah.
So we've got these classic Wyckoff principles and then this auction theory.
Mm-hmm.
But I'm still thinking about the algorithms
Right.
running around out there. How does Wyckoff 2.0 account for that?
That's where things get really,
Yeah.
really interesting. And we'll dive into that right after.
Oh, come on. Don't leave me hanging. Give me a little something.
Okay. Let's just say understanding who's really moving the market,
Okay.
hedge funds, algorithms, good old-fashioned humans. That's crucial in Wyckoff 2.0.
Ooh, can't wait to unpack that. This is getting good.
Yeah.
Okay, so you were saying how understanding who's really moving the market is like key to Wyckoff 2.0.
Right.
So spill the beans. Who are these mysterious market movers?
Well, they're not that mysterious once you look a little closer. Yep. You got your hedge funds making those big bets, high-frequency traders just like zipping in and out, and then, us regular folks.
Right.
But the book, it really emphasizes, we can't forget about the institutions, the ones with those huge pension funds and portfolios.
Right.
They're the whales in the ocean, so to speak.
Okay, so it's like we're trying to dance on a crowded floor.
Yeah.
But everyone's following a different beat.
That's a great way to put it.
Yeah.
In Wyckoff 2.0, it kind of helps you figure out, who are you going to follow and who's going to step on your toes.
Right.
Remember that stat about, 90% of trading in the S&P 500 being institutions?
Yeah.
Those moves we see on the charts, they're not random.
Okay.
It's often those big players making decisions.
Right. That makes sense. But knowing they're out there is one thing.
Yeah.
How do we actually see what they're doing? Do I need to get, a spy network on Wall Street or something?
No, not quite. Wyckoff 2.0, it introduces two powerful tools that give us a peek behind the curtain.
Okay.
Volume profile and order flow.
Okay, let's start with volume profile.
Yeah.
What is this thing, and how does it help us see what the whales are doing?
So volume profile, it's not magic.
Hey.
It's just visualizing data in a way that those normal price charts don't.
Okay.
Imagine your normal chart, but instead of just price going up and down, you see a histogram showing you where most of the trading happened at each price.
Oh, so it's like a heat map of where the action was hottest.
Exactly. And that hottest spot, the price with the most trading activity, it's called the volume point of control.
Okay.
Or VPOC.
VPOC.
This isn't just some random number.
Okay.
VPOC often acts as a magnet for the price, like pulling it back in or being the launch pad for the next move.
Interesting. So if I see the price bouncing off the VPOC a few times, that's a clue that level's important.
Exactly. It's like the market saying this price is fair right now. And volume profile also shows these high volume nodes, or HVNs.
More acronyms.
And low volume nodes, LVNs.
Okay, what are these nodes?
So think of HVNs like traffic jams on the chart,
Okay.
They're prices with a ton of activity, which usually means strong agreement on the value there.
Okay.
They often act as support or resistance, where the price pauses or reverses.
So if I see a HVN above the current price, it's like a ceiling.
Yeah, like a ceiling where sellers might come in.
Okay, got it.
And opposite for LVNs, they're like ghost towns.
Okay.
Price moves quickly through them.
So those could be good spots for stop loss orders.
You got it. Now, volume profile is great, but Wyckoff 2.0, it goes further, brings an order flow analysis.
Order flow. Okay, that sounds intimidating.
I know, right?
Yeah.
But it's not that bad.
Okay.
So while volume profile shows us where trading happened, order flow helps us understand WHO was doing the buying and selling.
Oh, okay.
And were they aggressive or passive? We're looking at the actual orders.
So instead of just knowing someone walked by, we see their footprints in the sand.
Exactly. Order flow, it lets us see the footprints of those big institutions.
Ooh, okay.
Let's say the price is going up, but we see a bunch of large sell orders.
Yeah.
That could be a warning sign that, this rally's running out of steam.
So it's a way to spot a trap where the price is moving one way, but the smart money is doing the opposite.
Exactly. Now, the book does say order flow is not perfect.
Yeah.
Sometimes those orders are hidden or canceled.
Right.
So it's not a crystal ball.
Okay, so another tool in the toolbox.
Right.
But how does all of this fit together? Wyckoff, auction market theory, volume profile, order flow.
That's where the Wyckoff 2.0 framework comes in.
Okay.
It's a system for analyzing the market it's way more robust than just those basic chart patterns.
Okay, so this is where it all comes together.
It does.
Tell me more.
So the book lays out this step-by-step process. They call it the operating scheme. It starts with, like, understanding the context of the market.
Okay.
Like, are we in a trend, a range, something in between? That sets the stage.
Right. Context is key.
Then you use volume profile to find those key levels.
The VPOC, the HVNs, those things.
Yeah, exactly.
Yeah.
That's your X-ray vision into the market's structure.
Okay, so we're mapping the battlefield.
Right.
But how do we know when to, like, actually buy or sell?
Well, that's where those Wyckoff principles shine.
Okay.
We start looking for those classic signs of accumulation or distribution within the context we've established.
Okay.
So is the price bouncing off a HVN with increasing volume?
Yeah.
That could be buyers coming in.
Right.
Is it struggling to get through a LVN with volume decreasing?
Mm-hmm.
Could signal weakness.
So we're taking the big picture from
Yeah.
volume profile
Yeah.
and combining it with those little clues from Wyckoff.
Exactly.
Make a smarter decision.
And then order flow adds another layer.
Right.
Like, are those big players backing up what we're seeing, or are they quietly getting out?
This is making a lot of sense.
Yeah.
But markets are constantly changing, right? So how do we adapt to that?
Well, the last piece of this operating scheme is developing those, like, if this happens, then maybe that happens scenarios.
Okay.
It's about anticipating how the market might react at those key levels.
So it's like we've got a playbook
Yeah.
with options, not just one rigid plan.
Precisely. Wyckoff 2.0 isn't about, like, predicting the future perfectly.
Right.
It's about probabilities
Hmm.
and having a game plan for, different things that could happen.
Okay, this is a lot, but I'm seeing how powerful this is.
Good.
It's like we went from walking around blindfolded to having this high-tech map and compass,
Exactly.
And I'm still a little fuzzy on, like, how do we actually ease this in trading? Does the book have actual examples?
Oh, absolutely. It goes through a ton of real-world trades
Yeah.
showing how this framework plays out.
Oh, perfect. Let's dive into those. All right, so Wyckoff 2.0 in action with, like, real trades, huh?
Yeah.
What kind of markets are we looking at here?
It covers a lot, actually. Stocks,
Mm.
indices, even currencies.
Wow.
It shows how these ideas work across different markets. It's pretty cool.
Okay.
One that stuck with me was the analysis of the DAX.
The DAX, that's the German stock index, right?
Well, that's the one.
Pretty volatile, isn't it?
Oh, yeah. Not for the faint of heart,
Right.
but that's what makes the example so good.
Okay.
It shows that even in a crazy market like that, Wyckoff 2.0 can help you, spot opportunities.
Okay, walk me through what kind of opportunity did they see?
So they spotted this, like, classic Wyckoff accumulation pattern
Okay.
right before a big breakout.
Mm-hmm.
And using volume profile, they found the exact levels where the smart money was probably loading up.
Oh, okay.
Then they used order flow to confirm it, like, yep, big buyers are stepping in.
So it wasn't just, like, guessing.
Nope.
They had, like, evidence.
Multiple layers.
So it's not just seeing a shape on a chart, it's understanding what's behind it, the psychology.
Exactly.
That's what I like about this Wyckoff 2.0. It's not just, like, technical stuff.
Yeah.
But let's be real, not every trade works out perfectly.
Right.
How does the book handle risk management?
Oh, that's huge. And they don't shy away from it. That DAX example actually shows that too.
Oh, okay.
Using volume profile, they found a level where, like, okay, if we hit this, the trade's wrong.
So it's a point where they'd admit they messed up.
Basically, yeah.
Yeah.
They decided their exit up front based on the market structure.
Okay.
Not just some random percentage.
Right.
Let your winners run, cut losses short. That's key to trading well over time.
This is, like, all coming together now. We went from wandering around lost to having this amazing map and compass.
I like that analogy.
But does the book only focus on these, like, really advanced things? What about, someone new to Wyckoff?
You don't got to be a charting expert to get something
Yes.
from this.
Okay, good.
It starts with the basics and then adds those more advanced things on top gradually.
So even a beginner can get something out of it.
Oh, for sure. It's written really clearly, even if you don't know all the fancy terms.
Okay.
Plus, tons of pictures and charts to help.
This is awesome. I'm putting this on my reading list for sure. Now, you mentioned a question the book leaves us with.
Yes.
About our own beliefs and the market.
Right. What are your beliefs about the nature of the market? And how might those beliefs be influencing your trading decisions?
Whoa. Okay, that's a lot. What does that even mean?
It's getting at how Like our own minds, our biases can mess us up even if we have the right tools.
Oh, so we could be setting ourselves up to fail without realizing it.
Yeah, like if you think the market's rigged, you might make decisions based on fear, right?
Right, right.
Or if you think you can predict every move, you might take too much risk.
Wow, that's a powerful idea. We got to master our minds before we master the market.
That's a great way to put it. And that's what's cool about this book.
It goes beyond just the charts and stuff. It talks about the mental game, which is so important for being successful.
This has been an incredible deep dive. We've gone from like Wyckoff's old school wisdom to these modern tools, volume profile, order flow. We even talked about like trading psychology. I feel like I've leveled up, you know.
Me too, honestly. It's been a fun journey.
To all our listeners, if you want to get better at trading, get an edge, I highly recommend checking out Wyckoff 2.0's structures, volume profile, and order flow.
A good one.
It's packed with useful stuff, real-world examples, the whole deal. And don't forget that question, the one about your beliefs.
Yeah.
Take some time to think about it. It might be the key to, unlocking your trading potential. Thanks for joining us on this deep dive. Until next time, happy trading.